Let's continue while Santosh comes back. We can. So this
Yeah.
is the what we call as the asset inquiry. Okay, inquiry is the place where you want to look up any details about your asset, or you want to see what is the different status, or any upcoming retirements, any additions, or any transactions that have happened on your assets. If you want to look up any particular asset also, you could do that. You could search it out by different books. Corp or US Fin Services Corp, and you need one more here. If I go and see recent additions, if there has been any recent additions, you can see them here. Okay, or recent retirements. So assets that were in service, but which you are now retiring. So these you can also check here. The retirement date maybe. Any leases that you might have. Based on these, you can see the different aspects. Let's see if there is a. Okay, let's search for the transactions. Okay. See, these are different transactions. From here, you can look at your asset number and you can pick up the asset details. And you also have different things. If you want to look at a particular detail about that, click on that transaction number. Next to this twisty, you can see different things. And you can look up the asset number also if you want to inquire something. This is pertaining to 112266, and this is for so every asset that you're going to be having will have a unique asset number. It will have a description, what type of asset it is, what is the category of the asset. Okay, and then you could have the serial number, asset keys, and all those things.
So the asset type is in defined value, means setup coming from setup,
Yes,
right?
yes,
We
yes.
have to, is it in user configurable in sense, can I configure in
Look,
my own?
yeah, lookups. Okay, we'll go and
No.
see that.
Okay.
So against this asset, this is in the books. Which book does it belong to? And then this is a corporate book which it belongs to, and you
Book
have
is
the.
nothing but a ledger here or what? Which one?
Yes, it is like the book of asset register, you can say.
Okay.
Books is the asset register, which will have a list of all your assets along with their cost, what is the depreciation, what is the net book value. Okay, so all those details will be there in your asset register.
So when you buy an asset, the entry is available in the payables, right? Because we
Hmm,
bought something.
hmm, hmm,
So that has been posted into journal.
hmm.
means the subledger accounting and all the way get carried to journal.
mm,
Here, as the asset gets depreciated, right?
mm,
For example, after end of 3 years, I'm trying to dispose the asset,
mm,
or instead, I can say that, and every year I run some depreciation process
mm,
to reduce the value of the asset. Every year you
mm,
post the thing to journal.
mm.
Are you going to
Yes.
every year when you run the depreciation process that is posted to journal, right?
Mhm.
Every month we need to pass on the depreciation on the books. Every month.
Every month, and that will get carried out to journal also every month.
Correct.
Uh, Only to the asset side.
Asset side.
See,
Just
here,
suppose if you are buying any material from any vendor, so it
Mm-hmm.
is a debtor for us. So what we do, we pass one entry in the payables and another entry into debtors. The same way, if this is an asset, one entry will be going to the payables and it will close off from there as a payment. And second entry will be lying in the assets and every month it will be getting depreciated. So depreciation is on reserve actually. So we are keeping a reserve. Once this asset is getting damaged, we'll buy another asset.
Okay.
so from payables, when you are entering your payment in payables, from there itself you move the asset, you can create the asset in fixed assets. Okay. So if you put in the details there and say you want it to move in asset, the system will transfer the asset from the payables line into assets. Okay. And here the important thing to note is your life in years. Okay. Based on the life, you would have the corresponding value, the year to date, or the annual depreciation, because the objective is to recover the cost over the period of the service of the asset, right? So by utilizing the asset, you're generating other products through which you are recovering the cost of your asset. So every year, like if you see when the cost is being done, you are actually creating a entry here which says the original cost was this much, whereas the depreciation is this much. So the net book value, that is, as per the books, the value of your asset has come down.
So this in the cloud, we can have the I know different depreciation methods. I know only
Yes.
one or two, I believe. I remember knowing that.
Yeah. Mm.
One is called as in straight line, and something like an
Mm.
exponential decline or decline
Mm.
something.
Mm. Yes, there are different depreciation methods.
Okay.
So here against that, you could have additional information like whether it's owned or leased or bought, or what is the type of property, whether it is being used or not. So all this information you can track against your asset, and these are your source lines. How did this come in? So this is the original source, who is the supplier who sent it, if there was a purchase order, if it is related to a project, you get all the linked information over here. If you want to look at that original invoice, you can click on this. So this is your original payables invoice from which the asset was created. Okay. Assignments, where it is being used, and which particular account is being charged for the depreciation, and history, it, what is the original cost, what is adjusted, These are the
What is a
depreciation.
recoverable cost here?
Recoverable is once you dispose of your asset, how much money you can get back.
So I think can you go back to that, please? So you can have multiple lines here
Yeah,
because every time you run the what do you call
depreciation.
depreciation
This is
process.
like fiscal year is there, so
Yeah.
the every year you could have a different line.
Oh, it comes as an yearly basis, is it? Not in if I have my own period of running the depreciation process, can I have that?
Yeah, you can. This is the YTD depreciation.
Mm-hmm.
Hmm. So these are the individual depreciation line periods. Along with that, what is the total net? This is all about depreciation in this tab. Okay, it shows you the depreciation amount, if there are any additional different types of depreciations that might happen. And what are the different transactions that have happened related to your asset.
Transferring, yeah.
Hmm?
Mhm. The transaction type transfer in the sense what? It be received
Transfer
from
in
some other
means, yeah,
department.
it came into, we acquired that asset. Transfer in our books of account, it came into our books of account. Books register.
Means, for example, as soon as we purchase that.
Yes, asset register. Date in which it came into our account.
So these are the next is the addition.
Hmm.
So it represents the same values as the previous row.
Correct. Correct.
So you mean to say that you have different type of life cycle, something like that? First
No,
it
it's not
transfer
that.
in.
Addition means like you did it through payables. So from payables, it came in through the addition, and then you took it into your books of account, into your asset book.
Okay,
All
so what is the
these
next level we can say that it's an active or something like or what how
yeah,
it will be?
it will remain in your books, in your
Asset.
asset book, it registered till every till you get rid of it, or what other transactions you might have done. So you might do some value addition to it. You might get rid of a part of the asset. Some of the asset might have to part of the asset might have to be replaced. So this is all things relating to your asset.
So till I get rid of that asset, it will be in the transaction type will be in addition only, right? Or
All of them,
something else.
all of them. Yeah,
No,
all
no.
the
What I'm saying.
transactions will be there.
No, what I'm saying is after addition, like today I got in a new asset to my company, like laptop, right? After 1 year or after a month or after let's assume that 1 year. After 1 year, I run the depreciation process. So what will be the transaction type that time?
So there it will come under depreciation. If you are running under a depreciation, you will get a depreciation line here.
Okay, but the transaction line remains same, only two.
It will relate to your direct asset.
Okay.
Okay. Now this was all about the assets that you are having.
This one
Okay. But
amortization start date.
yeah, amortization is the life cycle. Over the life cycle, you are starting to reduce the value of your asset over the life cycle of your total value of your asset.
Okay, so coming back to the first one, financial tab.
Mhm,
Somewhere I saw, just a minute, sorry for that. This one, life in years, 3 years. Okay,
mhm, mhm.
so is this related to the depreciation part?
Yes,
Sorry, the
it is. For how many years this asset will is planned to be used.
okay, so it is related to amortization value.
Mhm.
If I say 3 years, which is 36 months. So if I run the depreciation process for 36 months, will I get in 36 rows there?
It depends on what method you are using for your depreciation, depending on your depreciation periods that you are going to be using. So now this was particular asset that we had. So if you want to look at different transactions, you can see all the different transactions that have happened in this particular, uh, not only one asset, but in your books of account, all the different types of transactions that have happened can be seen here. Okay, you were talking about different types of transactions. These here you can see different types of transactions. They need not relate to the same asset, but they might be relating to different assets. So this tab shows you all the transactions that happened for a particular, for individual assets. Any recent additions that might have happened in your books of account. So So this was added in the month, this pertains to May 20. So this was added on 1st of May 20. So recent addition, if you change the period, I get something else. Here two assets were added. Here some more assets were added. So depending on the period, it will show you the as additions during that month. Any retirements that have happened in the recent periods, it will show you that. Okay, so there doesn't seem to be any recent retirements. So these are just like your filters or reports that you can generate out online. It's called the inquiry. So you can do the online inquiry. The final tab here is about the leases, different assets that you might have leased, and based on which you are claiming the you are using those assets and claiming the depreciation. So these are lease, as you know, mostly it is relating to automobiles or to, you know, other kinds of assets, including buildings and all also can be leased. So this has all the information about that particular lease transaction. Okay. Now let's take a look at behind the scene. What do we have? If we go to the financials offerings, you will find there's a section for assets, fixed assets. Under the functional area of fixed asset, you have these are the required setups. Okay, so let's first take a look at the system controls. So this talks about what is the name of the enterprise, the category. These are the three flex fields that need to be added here. What is this asset number sequencing, and which is the last number that has been used. So from here you have these three categories, these three flex fields that you must define and then assign them to your system controls when you get a fresh system. Once this is assigned, this will be used again and again.
Are you going to talk about the flag fields also, how to create them on the system?
We have already discussed this na, in the financials. Same fixed asset remains, the key flex field remains the same.
Okay.
We saw how we define key flex fields, how we define the value sets.
I don't remember. Let's see that. Let me go to one of the
So look,
video and
yeah, look at look
which
at
part
that.
we cover this one?
We covered it under the GL when we were
Okay.
doing the enterprise structures,
Uh,
where we defined
okay.
the ledger, we did the three, four C's we said. So over there
Mm-hmm.
we looked at the
No,
flexible
ledger,
structures.
ledger. I finished the ledger one.
Yeah.
I didn't find anything there. I finished the
Yeah.
ledger
Go back
videos.
and see, you will find it.
Okay. If not, I'll come back to you, sir, because I need the how to create and how to export into the next instances and all. Because you create the flex field in one instance, and I'm not sure how to get connect to the next instance.
Okay. So these are the three key flex fields that we have. Okay. So when we look at the first one, this is about the asset key flex field. So we are uniquely identifying the asset through the asset key. Okay, so this one has the different flex fields here. So this one is a single segment. They're talking about asset key. And when you look at this is the default, this is the value set that is being used. So when you go and check, there'll be a particular value set. And if you see here, okay. So this is the value set name display with, and this is the FA key value set. Excuse me. This is a single segment value set. This is the category flex field. So
This,
this has
these are mandatory to
yes,
define in the asset.
yes. So you
So
have two. 1 minute. Let me finish, Santosh. We have two value sets here. One is the major value set, one is the minor. So the categories that you will have, one is a major category, one is a minor category. What type of categories do we have here? We have one. If you look at the values here, you will see what type of categories are here. So this is like a building, computer, equipment, whether it expensed or not, fixtures, furniture, land, vehicle. So if you have any other category tomorrow, you can add it over here by adding it as a value in the list of values first. Now this is the major category. Against the major category, you will have minor categories as well. So the minor categories are. Now, one more thing, let me show you. This minor one is a dependent value set. Okay. So when it is a dependent value set, it dependent on the major category. So whichever major category value you are choosing, based on that, you will have, like this is building. So you have an asset retirement obligation. This is expense. So this is a cell phone. This is building. So this is a clinic. Computers, this is a desktop. So these are major and the minor categories. So if you look at just the computer equipment related ones, you have fitness, you have fixed. Under buildings you have like this one is a asset retirement, this is a clinic. So these are different types of buildings, and you have some more. This is hospital building. This is a leased manufacturing, whereas in equipment you have laboratories, immovable assets, HVAC equipment, leased fitness. So these are all your different categories of equipment. Okay, so this is your category flex field. Okay, so this defines what category of asset is it. Is it a building? Is it a computer? Is it a desktop, laptop? All those things are defined in the category. The final type of flex field that we have is your location flex field. What does location flex field have? It talks about what is the location of your asset, at which place is it deployed. Okay, so this has four segments: country, state, city, building. Okay, now only two of them are mandatory: country and city are mandatory. The other two are not mandatory. You may have them. It will help you to build it up in a better manner. Identify it precisely which location does your asset lie. Okay. Yes, Santosh, what was your question?
So these flex fields are mandatory for asset
They are
configuration.
mandatory. Yes.
Okay, because my doubt is here, when these are mandatory, why didn't Oracle give this as part of the initial configuration? Why we have to create flex fields and add the values there?
Why didn't they give it as part of?
Part of the delivered one.
No, delivered in the sense you will have to configure your own value sets, na?
Okay, okay,
Key flex field, what structure you need, whether it will be 3 segment, 4 segment, 5 segment. That is your decision.
okay.
Like your accounting key flex field. Accounting key flex field, you have to decide what are the segments you need.
Okay.
Okay.
Yeah.
All right. Now, once you define your key flex fields, so in the system controls, you will see we are supposed to link up your flex fields. These are the three flex fields where you are linking them. Okay, category, location, asset key. And after that, these are your fiscal years that you define. What are the fiscal years? So calendar, accounting calendar, ANZ fiscal year. So this one has the defined the different calendars that you're going to be using. This is the fiscal year calendar. Okay. And as per your need, you can define multiple calendars also.
So
This
all these are defined in a sequence, is it? The generally all the setups.
not just sequences, they need to be defined based on the requirement. Like in system controls, when you go, your flex fields have to be there and things like that. So most of them, these are the required ones, required setups. Some of them are independently, they have to be defined, but you can define them. These are the different asset locations. So the combinations that we were seeing, you can create new combinations as per your requirement also, and keep them as the list of assets locations. These are your asset calendars. Okay, so these could be the same as your fiscal calendar, or you can define them separately. This is a little more defined in the sense, this has the period name, period, start date, end date, and and here is the linkage with related to which fiscal year you're going to be having this. So when you try to create a new one, here this fiscal year comes as a drop down. We saw the fiscal year in the previous screen. So over there, the fiscal years that you will define, you will get them here as a drop down. And these are the prorate conventions. So uh, often you might have to prorate different calculations or different things like your depreciation or your cost. So what are your prorate conventions that you're going to be using? This is what defines that, from this period to this date, this is the prorate date. So this is a daily calendar. Here obviously every day will be set, but if you look at a monthly one, there you will get to see that between the 1st and the 31st, you are going to prorate it on the 1st of the month. Between 30th and 1st, you will of November, you will prorate it on the 1st of the November. So for every month, you're prorating it on the first day of that month.
Can you define this also, new values?
This is based on the calendar that you're defining.
I know when initially we can define this, right? The
Yes,
prorate
yes,
date.
yes, yes.
If I don't want on 11/1, I can go on 11/5. Can I
Yes,
do that?
yes.
Okay.
These are the different depreciation methods. You said you know a couple of them. So here's some more for your knowledge. You can have different ways of doing the depreciation. Okay. Here the life, you will find so many STL, but the life in years is different. Okay.
This life in years, for example, is set by the organization policy or how it is, or we have any industry standards. For example, if I buy the a laptop, the life cycle may be different,
Mm-hmm.
right? Let's assume that I don't know how you might expensed or not here. I buy the laptop, so laptop will always have the dependence in the OS, or the OS is dependent on laptop, mutual dependencies, I can say. But after 3 years, the OS will not support. Let's assume that. But my laptop I have different life cycle is 5 years, but it's incompatible with the OS. So in that case, how it's based on the organizations or how it works, or based on industry standards, or based on the product standards, how it works, the life cycle, life in years. Who defines that?
It depends to company, but when you are implementing any fixed asset policy, you have to mention over there and get a audit over that from Big Fours.
Usually these are
There
already
are some standards, but company follows company to company different.
correct.
I know,
It
but
has to be
they
reasonable.
all the big four will also give an idea on this.
Yeah, actually, whatever policy you will be creating in the organization, you have to
Mm-hmm.
get it audited.
Okay.
So fixed asset is compulsory. You have to get audit from the Big Four.
And government also has regulations that, if government says it is 2 years or 10 years, and then you go and you make it 40 years, that may not be acceptable.
That will not be accepted.
Yeah. So it has to be in line with your government regulations because you get tax benefits for this, right? So they will also want to ensure that it follows government regulations.
So that is because it is required to be audited. So some of the points, if there is some changes, so auditor will be let you know.
So, like you see here on the screen, when you're defining an asset, the life of the asset you can enter it as per your choice. Okay,
Since if
because
you require any accounting details or anything, you can contact me.
Sure, Rakesh. Thank you.
Saurav, I have a question for you.
yeah,
When we calculate this depreciation, so there are two ways. One is directly you cut down the straight line method and divide into month, and then you publish in the books. And second is daily basis. Suppose there are 365 days in the month, sorry, year. So you divide by 365, and every month there is a different number. Suppose 28, 31, 30. So accordingly, you push it. So how we will implement that?
See here, you have different ways of doing the calculation.
Okay.
You see this method type, calculated, flat, formula, production, table. So based on your how you plan to do it, you can see which ones works best. If required, you can also have a different type of formula also that you know, like you said, straight line or straight line is the simplest probably, right? But over a period of times, a lot of particularly in the production units where the value of asset depreciates based on the production capacity. So more production you're doing, your asset might be depreciation faster.
Saurav, I think so. You're not getting my point. Actually, I was talking ki just suppose ki we are taking straight line method, and it's not like when we purchase the asset, we will purchase on the first day. We might purchase on the 5th or 15th or any of the day in the month. So that time we have to charge in days, right?
Yes.
So in the same way, when you are calculating depreciation for all the assets, so you will be calculating day-wise straight line or month-wise straight line.
Uh, you could see here what they're doing. They are giving you a prorate convention. So how do you want your proration to be? So you have to decide upfront what type of proration you're going to be using. You could do a daily proration, you could do a monthly proration, you could do a mid-month proration.
So basically, the floration means charging in the books, right?
Yes, yes.
Okay.
Okay. So when you're defining your asset books, let's take a look at this asset.
Saurabh, your voice is going down.
Is
Yes,
it
voice
better
is
now?
very low. Yeah, better.
Okay. So here, as you can see, when you're defining your asset register, the asset book, you're specifying what prorate calendar you're going to be using. You have a depreciation calendar and you also have a prorate calendar. Okay.
Okay.
And when it comes to the depreciation, where do you want, what type of division do you want to do? Divide it equally over the by days or evenly. Based on that, the corresponding depreciation will be spread out. And on the books of account, you have different account heads under which the different parts of your depreciation or different parts of your asset related costs will be accounted for. Okay. So net book value, any gain or loss, whatever when you are selling or sell gain or loss, or cost of removal gain, proceeds of sale clearing, cost of removal loss. So these are different aspects that you have which are going to be there in your books of account.
So how you calculate this capital gain for this any of the asset?
Capital gain. Um, you mean at the time of disposing from the cost of
Yeah.
purchase and gain, right?
Yeah.
So when you're disposing of, so when you're disposing of based on the asset at the cost at which you're disposing, system will see the original cost and minus the disposal cost and and less depreciation and all that, it's worked out accordingly. These
Okay.
are the different rules that these are the different reference data set rules that exist, so you can link these rules to your assets, which are based on which the different types of information is visible in your books. Okay, rules for revaluation. Okay, whether you want to allow revaluation or not, and these are the advanced rules. Whether you want to allow group depreciation, do you want to allow CIP depreciation, member tracking, whether you want to allow intercompany members.
What are those CAP and all?
CIP is construction in progress.
Okay, so what does it mean?
It means that when a factory is being created, when a building is being built, you're investing capital, right? You're
Correct.
putting in money. So that asset, are you going to take into, when do you plan to take that into your books of
Okay,
asset? Is it
and
on a as you are adding more and more values into it, or do you uh, wait till the end and then you take it into your books of account? So that's what it talks about.
for members?
Members are the different within a asset you could have smaller pieces which are part of your total asset. Okay, so you may want to track them separately also, or you may track them together as a whole.
So this one, the group depreciation is something like grouping the sets.
Sorry.
Group depreciation.
Hmm.
Oh,
group
how do
Group
you?
description, group depreciation is about uh, multiple items may be grouped together, like we are saying members, right? So one particular piece of equipment might have smaller equipments also linked to it. So are you going to do the group depreciation, or are you going to do them individually?
Okay,
And over here, these are the different options that you have relating to your asset book, like depreciate if retired in the first year. If you are going to get rid of it in the first year itself, you can depreciate it totally. Allow amortize changes, allow any cost sign changes, allow impairment. Impairment is often like, part of the asset is now non-functioning. So you want to reduce the value of your asset. It's gone and you're writing it off. So it will, so you could have some part of the asset being sent out or being reduced from the original value. Okay, so whole asset is no longer usable. So in that case, we'll say allow impairment, allow ledger posting, whether you're going to allow posting for this books of account or not.
a
Allow,
default it will be posted to ledger, right?
yes, allow physical inventory, whether you're
No,
going to,
why are you giving the option again here? Because normally all the transactions we should have an you know, capability to post into the ledger. Is there any
so
exceptions where we don't post into ledger?
yeah, you might have it just as an asset register. You don't want to put it into a GL. So there might be a main asset register which will go into GL. There might be other books of asset registers which you don't want to post to GL. So for that you will not allow. Uh, Allow physical inventory. Physical inventory is like, whether you have them on, you do physical counting, or you have them physically present in your location. Allow leased assets. Leased assets are, the vehicles and all which you're taking on lease. which you are not owning them directly, but you are taking them on lease. You use the payables invoice date as the date placed in service. So this means whatever payables invoice date is going to be there, you can use that date as placed in service. Um, Allow unallocated payables invoice lines. If there is no allocation on the payables invoice line, will you still have the asset created? Suspend any automatic merging of payables invoice lines. So you don't want to do it anymore. You started with something, but you don't want to do it anymore. The next one is use the net book value threshold for depreciation. So there could be a uh, margin, a particular threshold beyond which you will not be doing the depreciation. Okay, so if it goes down, the net book value goes down below the amount of depreciation that you have been charging so far. Do you want to still do the uh, depreciation or not? And these are your capital gain that you're going to be having. What is the threshold years, in how many years or months you're going to be doing that? Inactive on, annual depreciation rounding. Okay, these are basically the settings that you have for all, for your main asset book. Okay, so based on this asset book, whenever you are acquiring any asset, you would be recording it against your asset book. Okay, now this was, usually we have three types of asset book. One is called the corporate, another is the tax, and the third is the budget. Okay, the tax is for taking into account all your tax related um, aspects of your asset. Okay, so they could be same or they could be different also, depending on your requirement. So this is specifically to handle the tax related requirements of your assets. Okay, they are exactly similar, only thing which is different is the book class. This is a tax one, and see, in this one itself the allow ledger posting is off. Okay, so you will not post to ledger from this book. The mandatory, these accounts are all mandatory, so even if you are not posting, you will be you will need to be providing these details. Okay, so these are the different asset books that you will be defining in your fixed assets. The final mandatory one is your asset categories. This is a important one because when you define the asset category, okay, based on the this is where you are linking up your assets. So these books that you are having, the asset books, that you are linking to your asset categories. Okay, so these are your different accounts that you can cost it to. So you had one at the books level, another one you can have at the category level, which you are going to be defaulting. Okay, so for each of these asset categories, you have the different books that are being linked to the asset categories. Okay. So whenever you're defining a particular category, you will need to come here and create your category and link it to a asset book. Okay. So this is about the accounts, and these are the default rules that you have. These come up from your asset book, and you can uh, link them up. What is the depreciation method? These are all your depreciation methods that you could have. Okay. So for each year, they are defining a different type of depreciation method. That's why you have so many of them. This is based on the declining balance. Okay.
Saurav, you are not audible.
Okay. So am I audible now?
A little bit low sound is good.
Okay. So I was telling you about the different accounting rules that you can link up to your asset book. Okay. And this category, you can link it to multiple asset books. Okay. Each category, you can link it to multiple asset books. If you want to add more things here, you click on plus and you will be able to pick up a particular asset book and then link it up to the category. So rest
Okay.
of the information gets pulled in from your asset book. Okay, like the ledger, currency, and here you have to come in and fill in the default information. Okay, so these are the required tasks that you need to keep in mind when you are defining the assets. And the other place, like we have seen before, you can always go and look at these setup tasks that you have here. You have the view documents. Okay, so you can look at the setup task and list and look at the list.
Okay. Sir, one question. From
Huh.
the compliance side, we require documentation as put to use and invoice. So that will be automatically saved somewhere.
You need a document for?
Compliance. Put to
Okay.
use and invoice.
Oh, put to use an invoice. Okay.
So this is the very basic requirement for compliance.
Hmm.
So it is attached to the entry level.
To use is date in use, right? That we were
Yeah,
talking about here. Okay.
yeah.
Yeah.
So just suppose some maintenance or IT side when we purchase or something.
Hmm.
So in IT, when we purchase computer, obviously we will be keeping in stock and then we will giving it to employees. So we take an what do you say confirmation from the employee that he is received, and from that date we charge on depreciation.
Okay.
The same happens with the machineries. So that is put to use certificate.
Okay.
So that is the basic requirement of the compliance. Put to use and invoice.
Okay. Put to use separately. You would have to create some sort of a report to get that information.
Okay.
Hmm. Where you can say, okay, because you need the signature of the person also confirmation.
Yes.
So you would have the asset number, asset category, location, all the details, and along with that, the date of uh, you know assignment.
Utility.
Yeah,
Utility.
and then based on that, you take a signature, and that would be the date
So
that you're putting it into use.
yes. So earlier it was R12 or R13. So we were taking it very raw form. But now it is cloud. Then in cloud also there should be some
So raw
mechanism.
form, how did you do that in R12? Did you run a report or something?
No, we used to attach with that asset only.
Oh,
So when you
as an
create an
attachment.
asset, yes,
Uh-huh.
as an attachment.
Okay. So when you do it as an attachment,
Hmm.
you had a form that he filled up, and then you attach that form.
Yes.
Okay. So that kind of thing you can do here also. Like when we were looking at this asset now, I was actually that form itself. I was thinking you can generate it out of the system also, right? So suppose you have this asset. Let's say in the asset there is a date here. You see it
Mm,
in service date.
hmm.
Okay. The default one comes in from your payables. So if you see on that asset book, we had said use the invoice date as the default date,
Hmm.
right? If you don't want that, you can tick it off. And here you will have to come and manually put in the service date.
So from where we have to remove that?
We looked at the asset. I'll show you that one more time. Okay. Now, this is one place where you can come. Okay. And you can put it here that
Hmm.
what is the date. Okay. This is the place where you can come and update in Fusion.
Right.
You can leave it blank initially when your asset gets created, and then finally once the asset is put in use you can update it, or you can initially get it created with the payables date itself, so that if it is the same date you don't do anything. And
Because it is not same every time. As such, I was taking care of assets in Ola as well and ITC as well. So in
Okay.
ITC, when we purchase some asset, so
Hmm.
obviously we are getting that asset from very far away, Australia, America, or
Hmm.
somewhere.
Hmm.
So that asset invoice date will be very different.
Hmm.
So that asset will arrive after 1 month, and
True.
after arriving, there is installation
Hmm.
and many things going on.
Correct. Correct.
So you got my point, right?
Hmm. Absolutely. So here, when you see this, when we were talking about these asset books, na, see here we had this use payables invoice date as date placed in service. You see this?
Okay, so it is for whole book, right?
Yes, it is default. It will
Okay.
default it moment you create a asset.
So every
If
time when we create the asset, it will ask for the date mandatorily.
if
No.
I uncheck it,
Yeah, if we uncheck it.
yes, yes. At the time of creating the asset, this would be a date that you will put in there, saying that what is the date placed in service. Sometimes you might have to go back and change your date placed in service also. You had expected that it will go live on this date, and as per your thing, you will start using it.
Yes,
Normally, do,
normally we have a concept CIP,
yes,
cost, obviously cost in progress.
correct.
So what we do, whatever invoice we are paying, so
Hmm.
we discharge that payable amount into a CIP,
CIP.
and once we use this in service,
Hmm.
then we pass on from CIDW or
CIP.
CIP
Yes,
to assets.
correct, correct.
So here, whatever you have shown, you have not nowhere mentioned that CIP. So that's why I was confused. Ki we are
No,
directly
no,
posting from
no,
payable or.
no, no. When you are creating an asset, when we create the asset, I'll show you.
Hmm.
You can create different types of assets. Okay. So I can add an asset. Here you have this capitalized CIP asset. You see here on the right hand side. So this asset type that you are having, one of the asset types is CIP asset.
Okay.
So initially, if you are having your building or you got your machine from Australia, and it's going to take you 1 month or 1.5 months to install and get it functioning. During that time, it could be a CIP asset. Is that how you do it?
Yeah, it is a CIP asset by the time.
Hmm. So then once it goes into service, then you will capitalize it.
Yes, and after it's capitalized, then only we will charge the depreciation.
Correct. Correct. So here, when you are capitalizing your asset, you will pull up those assets and then you will say capitalize.
So is there any attachment you were showing me somewhere? If we can
Attach,
attach some document or something?
attachment. Yes, there will be a provision to attach. Let me just see. See here, there is this attachments.
Okay.
Okay, so here you can attach different things relating to your asset. And right at the bottom, this is your financial details. Under your financial details, you will have the date placed in. Oh, the in service date. It's right at the top. See the
Yeah,
in service date.
yeah, correct.
So one option that you have is you can create it with that date itself on which you acquired it in payables. Or the other option is you wait till the asset is handed over to the person and then you enter it with the in service date.
Okay. And in assets, there is two type of login, one manager and one creator. Asset. No.
Yes, you can separate. Yes, that too is dependent on your role. So the
Okay.
role that you are configuring, that could
Hmm.
give you only inline inquiry access. So they can only inquire. They cannot do anything else.
Okay.
Other one is you can create assets, you can do different. Now, here in Fusion, they have in all the modules, it is all based on the roles that you're defining in the system.
Hmm.
So if your role allows you to update the data, you can go in and update. If your roles don't allow you to update, you can only view it depending on your access. You can control that.
So, and fixed asset register or something. Yeah.
Yeah, that is that books, na?
Okay. So
That
from
is your
there we can download an Excel or something.
exactly, exactly. You can do an export.
Okay.
You can do, when you are querying
Can
this.
we see that how brief it is? I want to just
Which one do you want to see?
fixed asset register should.
Register. Okay.
Yeah.
One is, when you are inquiring these assets, you
Hmm.
can go, you can do all this, manage all books and inquire assets. Suppose you are doing this inquire assets,
Hmm.
you can look at transactions, you can look at the books, you can, let's say from your books, you want to look at all your particular type of category. Okay, you want to look at your building,
No, I was talking just one report including all the categories.
everything relating to all categories. Okay,
Yes.
in that case, like when you okay, the what I was planning to show you was this is the list of all the assets of building in belonging to this particular books, and then you can do an export to Excel.
Okay. This you have already showed.
Yeah, so you wanted other categories, right?
So for financial reporting, we require all the category list, and aside there should be an depreciation value put in.
All details. Okay, then
Yes.
let me
all
show
the-
you the this is one. Okay, and see the asset register is there. Okay, and transactions, retirements. Which one do you think you want to see? We can run
Asset,
both of them
asset
also.
register can we
Register.
run?
Okay. Only the period here is mandatory. So
Yes,
let's
okay.
run it as of
Latest put it
March
there.
or April 20, let's say, or May 20, whichever. We'll leave this blank so everything will get included.
We can directly run from this report.
Hmm.
Then it will be. So any changes to the default report can be done, right?
Yes, they can be done. You have to make a copy and make changes. Usually the technical guys are involved in those.
Okay.
This is an HTML file. Default one, you can always change that. Do you see the tab opening up?
Yeah. It's blank.
So these are the reserves year to date depreciation.
Okay,
So
sir, got it. We
for
can
an
continue.
individual asset, you get all the details. Does this fulfill your need?
Yeah, this is good.
Okay. Now, in your case, did you have any asset impairment or anything like that?
Yeah, that also we have.
Okay. Can you share an example of what kind of impairment you had?
See, we when you see this Tetra Pak packets, na, when you buy some juice or something. So for that, we purchased one asset from Australia. So that was a huge machine. So obviously, there was almost 4 to 5 parts of it. One is tanker, then DG set, and another things. So
Okay.
we had one problem that DG set what was attached to the mainframe of that asset.
Mm.
So that was what do you say default. After 6 months, it got not working, not functioning.
Oh,
So we had to change that asset.
okay.
So
Okay.
that particular part we did impairment and then we bought a new.
Okay. Okay. Good. So, Santosh, are you following this example?
Yes, sir.
Okay. And amortization, did you do any amortization?
Yeah, we have done accordingly
Okay. So that only you did the amortization for that part
for
only
the
or
particular part only.
for that particular part? So amortization is the write-off of that entire thing over the life of the asset.
Yes.
Okay. Santosh?
Yes, sir.
Yeah, what I will suggest, Santosh, you can go on to web also. You can search for asset depreciation. You will get some write-ups. Just read that up from the functional for the functional knowledge of it.
Mm-hmm.
Because these are very unique. Because whatever is done there, those are followed in the system, right? So the functional process part of it is followed in the system. So the functional knowledge or the functional details, different queries that you may have, those will get answered when you read up on the functional side. And
Okay.
Google is good for that. You will get lot of
So we
information.
can have discussion. That is a very interesting topic for me.
Okay.
Where
Okay.
I have 9 to 10 years experience in the same thing.
Excellent, excellent, excellent.
That's why I noticed today Rakesh is asking more questions. Then I realized that.
He's
And
yeah, we add a lot of value. That is how we learn, right? Where the example that he gave, In future classes, I'm going to use those examples. So that's how we all learn. Good. All right. Any other questions? So what I will suggest is please go through that video of our last class. It is a high level overview of all things relating to asset. Okay, that's how what it is. And after that, if you get a chance, just go through these required steps. Just review them. The required tasks. If you have questions, we can do that in the next class. Next class, we'll start creating the assets. Okay, there are different ways of creating the asset manual. We can create them or we can upload through Excel sheets. And then we'll see the ones with payables also. We'll create a payable invoice and then we'll add that in, we'll transfer that over to fixed asset as well.
So assets we can upload from like, that what do you say sheets, right?
Yes, we have a spreadsheet nowadays. All in fact all of these processes have a spreadsheet. So from whether it is invoice, whether it is receipts, all of them have spreadsheets. So you can upload from the spreadsheet also. Makes life easier. Once you have a template, na, you can give it to somebody. They can just put the data in that format and you upload.
It makes a lot easier. Yeah. It was a lifesaver for me in Ola.
No, no, they are very useful. Yeah. And nowadays, Excel is so deeply embedded in everything we do. Na? Without
Uh,
Excel, it's virtually, very, very difficult to work. And when you get these, like you said, all companies have huge number of assets. So we often
I will
think,
give you one small example. So just
hmm,
in Ola cab, when you sit now, there is two devices. One is for the customer and one is for the driver. You remember?
Uh, Excuse me. Hi, Saurabh. This is Bhaskar.
yes, Bhaskar.
We have one session at 9 o'clock on this meeting. I'm sorry. I didn't realize your meeting is still going on.
Oh, okay. Not an issue. We are almost done. So we'll just
Okay.
give me a minute. Rakesh was just finishing off. Yes, Rakesh.
Yeah.
Uh, yeah, so there was around what do you say 46,000 devices
Oh my God.
for the driver, and we need to account for every individual asset separately. So now you can understand how critical it was.
Yeah. All right. All right
We
then,
can
Sant.
end this session. Okay.
Yeah, we'll end the session, Santosh, and we'll start again on Friday. We meet on Friday, same place, same time.
Santosh, any doubt for you?
No, no, I'll go through the videos and I'll get back.
Yes, please, and then we can now have a separate. We can talk about it later also. Okay.
So
Thank you.
Thank you.